Let's go now to our guest, Connor Finemore from Galaxy Trading. Connor, welcome to Galaxy Brains.
After all of these years, I finally get the look. I'm excited.
So BIMNet is ill this week, and Connor works with BIMNet on the trading team. And I asked and Connor's an astute observer of markets, so I asked Connor to come and give us the lay of the land. Connor, we are in this period of uncertainty that followed the market euphoria of January. We've sort of been down to sideways and uncertain since then. A little bit of a rally this week in equities and in Bitcoin. What do you make of that rally, and what are you seeing out there?
Yeah, I mean, I think the period has still been very volatile. And when you start to drill down into the different investor classes and how they've been trading this move over the last month, we've observed that long onlys really have been big net sellers. And that's been, week after week. And those guys don't really pile back into markets when equities start moving higher. And so this rally's been really lightly participated. Volumes are running 30% of the 20-day average. And so, we still think that this is a headline-driven market. And anything that Trump says, 100 keystrokes, can change the direction.
And there was an interview he did on Sunday where he seemed to narrow the impact of tariffs that are these reciprocal tariffs that are going to come up on April 2nd. He seemed to say they might be more targeted than the market thinks. And was that the fuel for this?
And I think that's just sort of the ebb and flow that we've had, tariffs on, tariffs off. How big is it? What are the actual impacts? I remember when the China tariffs initially happened, it was a 10% additional tariff, and everyone's in the market going 10% on top of 10%, 10% total. Is that 20 plus 10? Like, the communication has been vague, and so that's left markets really scrambling and really guessing. And a lot of the times, it even within the administration, it's not clear that everyone's aligned on exactly what the plan is. And so all it really takes is one headline today, which we sort of saw, to turn equities right back around. And so, volatility is low. We think that owning vol, however you express it, continues to be a decent trade, and try not to get too committed to your views because things are changing really fast.
There was a great interview on the All In podcast, which I'm generally not a huge fan of, but with both Treasury Secretary Scott Bessent did an interview last week. So did Commerce Secretary Howard Lutnick. Did you listen to those interviews?
They're both required listening.
Yeah.
I think, particularly Bessent.
Yeah. What was your takeaway on Bessent? I mean, they may have made many, but
there are many. They're really focused on the 10-year. I'm sure that's been a conversation topic. I'm definitely not reinventing the wheel with that, but there's a lot of focus on tax receipts and tax policy. We're getting into that time of the year. There's been some conversation that receipts are lower, and that really puts even more pressure on the fiscal situation. Right? They want to cut spending. They want to cut taxes. But if they're not taking in enough receipts in a year where stocks are up, wages are up, unemployment's low, everyone's had a really good year in 24. With this more complicated backdrop in 25, it can, it's setting up a really hard job for Bessent.
Yeah, I thought he was also extremely thoughtful and intelligent about, which I guess shouldn't be a surprise given that he's a longtime investor.
Definitely.
This is a tricky needle that they appear to want to thread, right? They want the 10-year and rates in general lower. It's better for the debt for sure. It's also better for homeowners and home buyers. But they want to cut all this spending. But that can also harm the economy, right? If they, lay off.
Yeah, I mean 100%.
What is it? 4 million people work for the federal government?
Yes, I don't know the exact
crazy
number.
Many millions.
It's something like that, and you cut 10% of that, and they're not exactly low earners either, and they live in population centers in the country. So that impact, we haven't observed a ton of it in the data yet. It exists in certain pockets, but it doesn't take a lot to see. They're cutting people at the SEC. They're cutting people at the IRS. They're cutting people, DOE, all of that type of stuff. So I shouldn't say DOE. It's Department of Education. I mean, not Department of Energy.
Right. Well, maybe. But yes. But education they've talked about.
Definitely.
Yeah.
So yeah, I think that sort of stuff is going to take time to play out. But it definitely makes it hard to be very, very constructive particularly risk markets, and that bleeds over to Bitcoin, right? Because at least for now, it really feels like Mike had this great comment this morning. He called it the Mag 8 and included Bitcoin with them, and the reality seems to be that's really how we're trading.
Yeah, it's trading like a big macro equity, basically, like a NASDAQ.
Right, which provides an interesting opportunity to hedge yourself. If you want to sit with your core Bitcoin positions, equity vol has come in a lot in the last couple of days. S&P downside might be an interesting way to hedge yourself, so that you can sit with your core longs and try and weather the storm.
Yeah, that is interesting. I wanted to ask you about the strategic Bitcoin reserve. I know you're a skeptic, so I'd love to, if you make, what is the skepticism? I don't get me wrong. I don't think this is that hard a question.
No, it's not. I mean, it's a funding question. It's a focus question. I think the more that the Bitcoin as digital gold becomes sort of consensus in the American psyche, then maybe it makes more sense. And I always laugh at the budget neutral conversation because in my view, there's no such thing as budget neutral, right? Everything that the government does has to be funded by something. And so, whether it's selling $2 billion of gold a month to buy Bitcoin or something like that, that'll create shockwaves, or privatizing Fannie and Freddie and using some of that funding to buy Bitcoin or other strategic assets for the U.S. I mean, there are a lot of different ways that they can do it, but I just think that right now, it's early and it's going to require a lot of political needling.
Yeah, any dollar you spend on Bitcoin is theoretically a dollar that could be spent on something else, let alone just saved to close the fiscal gap, right?
Yeah, right. Like you could pay like 200,000 employees or something, for example.
It is a super interesting, not just that, but things like tax cuts or, they talk no tax on tips would be a net new tax cut. They're talking about, I think Howard Lutnick mentioned, no income tax for those who earn less than $150K a year.
Right, which is an interesting one because functionally that's kind of how things
I was going to say something like
but
75% of all taxes are paid by people that make more than $150K per year.
Right.
But like when you talk about these are offsets, right?
Mm-hmm.
So like you want to simultaneously close the gap in the deficit while also taking money and putting it into Bitcoin. Introducing new tax cuts, right? Like,
right.
It's hard to sort of square that circle yet. I know it's still early. I'll give them a little bit of credit here that we're not really
100%.
sure. But I look at that I think maybe this contributes to the uncertainty that we're seeing.
Definitely. And I think you've got to find funding sources at some stage, right? And that's always the hard conversation. Like when you're cutting spending, like someone is going to lose. It's the way it is. If you're going to raise tax receipts from somewhere else, university endowments seem to be very in the focus right now. Maybe Harvard shouldn't have a $50 billion endowment, but then people will say, well, what about research? What about financial aid? There's always a push and pull, right? And then there's a conversation in the ETF world right now, like how many tax receipts has the U.S. given up from, the $1 trillion of assets that's moved from mutual funds to ETFs? I know that's not really a core conversation for this podcast, but, those capital gains have been great in the U.S. Maybe some of the winners should be paying some of that to the society that created all of this wealth, right? That's a totally different conversation, but probably to the tune of hundreds of billions of dollars in missed taxes. So
yeah, it's fascinating.
Very.
Before we wrap, Connor, I wanted to ask you, you're more of an equities and traditional markets guy.
Sure.
What are you doing working at Galaxy? What gets you excited about being in the crypto capital markets?
It's the people that I meet, and I have to be careful that I don't mention any specific things that I'm working on, but you'll be surprised the amount of people that are engaged with the space that are either dipping their toes in or have been involved for a while that need new styles of financing to work on their real businesses. This is totally separate from token projects, right? And it's been a very fun way for me to engage in the space, work with companies. How do I do a bridge financing for you while you work on another capital raise? How do I help you manage your treasury if you want to use Bitcoin as a treasury asset? These sorts of things have been really where I've been able to carve my space at Galaxy, and just the people that you come across, it's really a really incredible subset of the world. So.
I totally agree. Well, I appreciate you coming on Galaxy Brains, Connor Finemore from Galaxy Trading. Thank you so much.
Thanks for having me. Hopefully it's not the last time.
No, it won't be.